The funny thing about that is they recently actually just launched a chat GPT bot portfolio that buys 20 stocks. I think it's 20 stocks and rebalances weekly. And it's holding a lot of technology right now. I took a glance at it just to see, out of curiosity.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. Well, we just got the core CPI numbers out, and much as expected, PPI is next. FOMC is happening already. Today is June 13th, 2023, and Friday is the quad witching hour, where basically 4 times a year, we have 4 major asset class options expire on the same day. Eddie Gifford, you are with us now to help make sense of an insane world here. CPI, so we should be dancing in the streets. It came in, it's only 0.4%, so core inflation rate of a little more than 5%. It's great, right?
Well, you would think so, the way the market's reacting. We saw this morning when they first headlined, and the headline inflation is actually only up 0.1 month over month. So then when we take out the energy and food, we're at 0.4 month over month, which annualized is still 4.8%. So super, super far away from that 2% target that they keep telling us about. And I think what it does is it kind of opens the window for at least a hawkish stance tomorrow with the Fed, maybe even a bump, maybe even that 0.25 point bump. Everyone wants Powell to kind of pump the brakes and kind of, play the wait and see game. But if there's anything that he's been clear on over the last 18, 24 months, it's that he wants to get inflation under control. And if we go back to the 70s, we can remember that, inflation seemed like it was subsiding. They started to cut, and then inflation just ripped up. And so I think that he doesn't want to make that mistake. But, we'll see there. There seems to be a lot of pressure also for a more dovish stance. So, it doesn't help that it's a, pre-election year. And then a lot of stuff is going to happen over the next, 15 months.
All right. So we're heading for stagflation, in other words.
I would say that stagflation is kind of the base case and probably the most worrisome case at the same time. We're sitting in this scenario where growth is definitely muted. Inflation looks like it's going to remain elevated. And so, if we look at, what does that mean for markets in general? Generally speaking, if we're looking at the broad stock market, that means we're probably going to be stuck in a range for a while. And I think we're at the top of the range right now. So everyone might argue that AI is going to save us all. But when AI doesn't come through in 6 months like everyone's anticipating, I think that we're going to be disappointed. And so, the flexibility and probably keeping your eye on commodities is probably a good stance here.
All right. Has anybody asked AI what you should be doing here investment-wise? What is ChatGPT latest investment advice?
The funny thing about that is they recently actually just launched a chat GPT bot portfolio that buys 20 stocks. I think it's 20 stocks and rebalances weekly. And it's holding a lot of technology right now. I took a glance at it just to see, out of curiosity. And so, it didn't hold NVIDIA when NVIDIA blew up, though. So it definitely can't see the future.
All right. So where do we find this AI portfolio?
Well, there's different ways to find it. The AI portfolio that I'm referring to is something that CNBC was actually promoting through an app called Autopilot that you can kind of jump on and see what it's doing. And I think that there's going to be a lot more of that. We're going to see a lot of more AI, at least influenced portfolios. I know that at Tactive, we're interviewing different AI companies to say, hey, is there some way that maybe we can add some type of AI derivative to our model portfolios? So if you're not at least exploring it, then you're falling behind.
Yeah. So you played around with it. You tested it out.
Oh, I at least took a look. It lasted a week before I said, no, this isn't for me. I think that, it's important to have inputs, and AI can serve as a great input, but you still need someone to interpret those inputs, and your interpretation of those inputs is going to be what's going to drive the success of this portfolio or not. Mechanical works to an extent, but there's a lot of other little things that can really mess up the portfolio if you trade at the wrong time, if you, how you trade, what you do, if you're using limit orders versus market orders. So there's a lot of different things that even though the signal might be right, the portfolio could be wrong because you just didn't do it right.
Yeesh. So really, and you did it at the wrong time because that call might have been good for 10 seconds, right? How long is it good for?
Exactly. And how many of us can just sit right there and hit the button? And then even if we hit the button, is it going to get filled compared to the supercomputers that we're up against? And the answer is probably not. So, you need to lean on good research inputs, have a strategy, make sure that you have profit targets, make sure that you have stops in place, protect yourself, and just know that if the trend is up, it's okay to lean in. And if it's not, there's nothing wrong with an account, invested in treasuries that's earning 5.25% right now.
Yeah. So you should take what you can get.
Yeah, I think that, especially right now, we're definitely, seems like we're a little bit extended. We're near the top of a range. If stagflation does hold true, this range could be, this could be like the upper limit for the next 10, 12 years. Now, obviously, if it breaks through and runs, that's why you have profit targets, and then that's why you have stops. If it rolls over and things go back down, you get out and you wait for another buying opportunity. So discipline is what drives success, in any investment strategy. And then, your ability to stick to your strategy regardless of what's going on. I think that that's the thing where a lot of investors have a lot of trouble is, this one's not working for the last, 6 months, so we need to abandon it, right? And the picture is much bigger than 6 months, and we need to remember that, especially when we're risk managing, right? Because at the end of the day, we're just trying to offer a superior risk-adjusted return, and what that means is sometimes we're going to be wrong, right? But that's okay.
All right, so. Should you be in the market at this point? It's always said that stocks climb on a wall of worry, right?
Yeah, I don't think there's any issue with being in the market. I think it's just having an investment strategy with an exit strategy, whether it's on the upside or the downside. Making sure that you have a plan that you're following. I wouldn't necessarily say, oh my gosh, we should go all in right now in any specific sector or anything. But I think, volatility is around the corner. I think that it's been muted for a while now. Next year is an election year. So they're playing the dollar cost averaging game when you're sitting in cash or sitting in treasuries at 5 to 5.25, 5.5, to build a position over the next 12, 18 months isn't a bad thing. And if you're going all in, make sure you have an exit plan.
All right. I like that. All right, Eddie. It's always great having you on. So tell us, where do we find you? How do we connect with you on the web?
Yeah, the easiest thing, go to tactivewealth.com/Eddie Gifford. You could also just Google Eddie Gifford and I'll be right there at the top of the list. And, we're excited to talk to anybody who's looking for a differing opinion of what you can do with your money out there.
All right. Well, we need that. That's for sure. Hey, if you've got a question for Eddie, myself, KL@KerryLutz.com is the email. Make sure you go over to the site, financialsurvivalnetwork.com, and sign up for our free newsletter, and you can click right through to Eddie's site. Eddie, we'll be talking to you again next month and see what they've got in store for us then.
Sounds good. Appreciate it, Kerry. You have a good one.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.